Internal Revenue Service IRS tax news. Taxpayers should file by July 15th tax deadline. Automatic extensions to October 15th available. IRS has easy ways to help taxpayers who need more time or payment options. IR 2020-134, June 29th, 2020, Washington. The Department of Treasury and IRS today announced the tax filing and payment deadline of July 15th will not be postponed. Individual taxpayers unable to meet the July 15th deadline date can request an automatic extension of time to file until October 15th. So they've been pushing this thing out. Obviously, generally, your tax returns for 2019 or the prior year are going to be due in the following year, in this case 2020, April 15th. But then they pushed it out, and then they pushed it out to July 15th. And now they're not pushing out anymore. The IRS is getting worried. I think they're getting worried over there. They're not going to get paid or something, right? So it's pushed out to July, and they're not going to push it out any further than that. However, as is normally kind of the case, you can still go on extension. And typically when you normally go on extension, it's basically your tax returns normally due on April 15th, and then you go on extension and then you have till October. So you could still do that now. So now the July 15th is the deadline, and then you can extend to October. Just remember that as you do so, the payment deadlines are not the same as the filing deadlines. So the IRS typically wants to be paid during the year, which would have been during 2019. The payments are a little bit different this year, of course, as well, because there's been payment deadlines postponement with the filing deadlines, as well as payment deadlines postponements for 2020. But just realize that when those two things aren't the same, the filing deadline and when they want to get paid are not the same thing. The filing deadline being pushed out means that you're not going to get a penalty for late filing or not filing, but the tax is still due. And then when they push the deadline for the tax payments out, that basically means you're not going to get charged, hopefully, penalties for the late payment and possibly not interest. But the tax related to the tax year will still accumulate and need to be paid at some point in time, which could actually lead to people kind of getting backed up on the taxes as the payment filing deadlines are delayed and they become due at some point in time, all at one point possibly. Anyways, back to the text. Due to COVID-19, the original filing deadline and tax payment due date for 2019 was postponed from April 15th to July 15th. The IRS reminds taxpayers filing Form 1040 series returns that they must file Form 4868 by July 15th to obtain the automatic extension to October 15th. So if you want that automatic extension to push it out from July 15th now to October, which is kind of like the normal extension process that would typically take place in April 15th, then you're going to need that Form 4868, pretty straightforward form to fill out and process. The extension provides additional time to file the tax return. It is not an extension to pay any tax due. So that's going to be the key point, right? It just extends the time in which you need to file the tax return, so that basically you're going to avoid, if you file later, the penalties related to filing later. Doesn't push out the tax deadlines. The tax deadlines are going to be a separate thing in terms of when you pay the return. Remember that the 1040 is basically supposed to be kind of like an informational return, meaning you're supposed to have paid the tax before that point, and then you file the 1040, which is an informational return. In a perfect world, the amount due would match up to the amount of payments that you made, which of course in the real world is impossible because the tax code's way too complex and no one could possibly predict exactly. So you try to predict, in the ballpark, hopefully a little bit over, and get a little bit of a refund at the end of the time period. But the point is that the payment portion is supposed to happen kind of before the tax return is filed most of the time, the tax return being a informational return, and therefore when they push out the deadline, they could save you the penalty for filing late, because that's what you're gonna remove. But the due dates for when the payments are due are still in place, and if those are late, then you're gonna get different kind of penalties and interest for that. Back to the text. The IRS urges people who owe taxes, even if they have filing extension, to carefully review their situation and pay what they can by July 15th to avoid penalties and interest. So there it is. They want to avoid penalties and interest. One is to make sure that you file the extension for the late filing penalty, and two is to make the payments when due. Two separate things. For people facing hardship, including those affected by COVID-19 who cannot pay in full, the IRS has several options available to help. To avoid interest and penalties, the IRS encourages them to pay what they can and consider a variety of payment options available for the remaining balance. So what you want to do, if you can't pay the taxes, typically what you don't want to do is just say, well, I'm just not going to file, and that's it. So if this might be the first time that some people probably can't pay the taxes, maybe for the first time, and that could be a kind of scary situation. But they do have a lot of options to set up a payment plan, basically, which would be kind of like the normal option. So you still want to file the tax return like you normally would. Note the liability that you have on it, pay what you can with it, and file the tax return, process the tax return to avoid any further penalties and interest related to penalties for late filing or late payments, and then set up the payment plan. And there is interest involved with it and whatnot, but the IRS, it's a pretty good, rate of interest, within a market rate of interest and whatnot. So that's the way to take care of that. Typically, it's not too tough of a process to set up a payment plan with the IRS if it's something new to folks, and I'm sure it is this year. So back to the text, quote, the IRS understands that those affected by the coronavirus may not be able to pay their balances in full by July 15th, but we have many payment options to help taxpayers, end quote, said IRS Commissioner Chuck Reddick. Quote, these easy-to-use payment options are available on irs.gov, and most can be done automatically without reaching out to an IRS representative, end quote. So in other words, to set up the payment plan, typically you could basically do it through the online process without communicating, without having to talk to anybody about it either, which is a good thing. So back to the text. Automatic extension of time to file. Taxpayers who need more time to prepare and file their federal tax returns can apply for an extension of time to file until October 15th. To get an extension, taxpayers must estimate their tax liability on the extension form and pay any amount due. So when you file the extension note, you still want to do an estimate about how much taxes you're going to owe, if you think you're going to owe any taxes, and then still pay them with the extension. That would be the best way to go. And you might say, well, I don't know how much I'm going to pay until I do the taxes. Yeah, well, yeah, that's the problem. That's kind of the problem. You don't know how much you're going to pay, but you want to estimate the amount that you're going to pay, because if you don't, then if you underpay, then you'll have penalties for the underpayment, and so you want to estimate as best you can and make that estimate so that you could save yourself the penalties involved with underpayment. Back to the text. Individual taxpayers have several easy ways to file Form 4868, application for automatic extension of time to file U.S. individual income tax return. There's a link to that form here. By July 15th deadline. Tax software providers have an electronic version available. So that would be the easiest way to do it if you have a tax preparer preparing your software, or if you have tax preparing software, then typically you can do that electronically and file the extension, and that would be an easy way to go. In addition, all taxpayers, regardless of income, can use IRS Free File to electronically request an automatic tax filing extension. So there's another option if you don't have access to software and you just want to file the extension, which is a pretty, really basic form. You could use the IRS Free File. There's a link to that here. There'll be a link to this in the description. Save a step. Get an extension when you make a payment. Taxpayers can also get an extension by paying all or part of their tax due and indicate that the payment is for an extension using Direct Pay, the Electronic Federal Payment System, EFTPs, or credit or debit cards. These are another options. There's links to those payment options here. When getting an extension by making a payment, payments do not have to file a separate extension form and will receive a confirmation number for their records, which is nice to have the confirmation number, right? It's nice to be able to say, hey, not only did they receive the form, but if they give you, if they give you the confirmation number, you want to be able to have that in case they come back later and say, hey, you got a penalty for filing late, when you're like, no, I had an extension, and then you want to prove that you had the extension by giving them, whatever evidence you have of that. And that evidence isn't just what you have on your side. You want to make sure that you have evidence of them receiving the extension within the deadline. Back to the text. State deadlines may differ. So the IRS also reminds taxpayers to check their state filing and payment deadlines, which may differ from the federal July 15th deadline. A list of state tax division websites is available through the Federation of Tax Administrators. So you could take a look at the states. Remember, the state and the Fed are not the same thing, right? The Fed and the state, like the state may mirror what the Fed is doing, but they don't. They're two separate entities. So when you're dealing with the state and the Fed, you want to think of them as two separate entities. And so make sure that you're in compliance with whatever state regulations you're dealing with as well. Once again, to avoid the penalties and interest. They may mirror, many of the states may mirror what the IRS is doing, but don't just assume that to be the case, because it's not always the case. Back to the text. Payment options. Taxpayers who owe taxes can choose from the following payment options. There's a link to these payment options here. IRS Direct Pay allows payment directly from the checking or savings account. This service is free. Electronic Federal Tax Payment System, or EFTPS, pay by phone or online. This service is free. Direct or credit card payment. This service is free, but the processing company may charge a fee. Fees vary by company. So if you want to pay with a credit card, the IRS uses a processing company, so the IRS isn't charging you any money, they're saying, but the payment company that they use to process the credit card may charge a fee in that case. And then we have the check or money order made payable to the United States Treasury or U.S. Treasury through the mail. And remember, the mail is apparently quite backed up these days, so it might take them a little bit longer to process the check or money order. So they're really kind of pushing the electronic payments, if possible, at this point in time due to the social distancing and whatnot. And I think, to be honest, just IRS's push to get everything electronic. But back to the text. The IRS recommends that taxpayers who are unable to pay their taxes in full should act as quickly as possible. Tax bills can quickly accumulate more interest and penalties the longer they sit. So, and that really is true. So just, like if this is the first time where you're saying, hey, look, I can't pay my liability, like I'm sure that's the case, for many people. And if it's a new thing, you're going to go, well, I might as well not even do my taxes because I can't pay the taxes at this point. Again, it's for sure not the best approach to do, because then the thing just gets pushed out. So what you want to do is avoid the penalties and interest as much as possible, and then pay what you can. And so you want to avoid the late filing penalty by going on extension and or filing the tax return. And then you want to avoid any late payment penalties by making any payments that you can, and then setting up whatever you can with the IRS, such as a payment plan, so that you set the terms of your penalties. And you can remove most of the penalties that way, and then you set the terms on your interest payments that are set up. And you'll be in good standing with the IRS. If you need to negotiate with the IRS on things, and you have requests, it's a lot easier to do so if they feel like you're dealing with them in good faith, right? If you just don't respond to anything for a few months or something, then it's a little bit more difficult to work with them in good faith. So if you just even if you can't make the payment, if you set up the payment plan, that would typically be the easiest thing to do. And like you say, if you file the tax return and you owe money, then pay what you can, and then you could set up basically the payment plan. And you may be able to do that simply online, and you don't have to basically talk to anybody on it. You might be able to do the whole thing through either tax software or the IRS website. Okay, back to the text. Several payment options are available on irs.gov/payment. There's a link to that here to help taxpayers who can't pay in full, and some can offer taxpayers smaller penalties. Though interest and late payment penalties continue to accrue on any unpaid taxes after July 15th, the failure to pay tax penalties rate is cut in half while an installment agreement is in effect. The usual penalty rate is 0.5% per month, is reduced to 0.25% for the calendar quarter beginning July 1st, 2020. The interest rate for the underpayment is 3%. So that's what you want to do. You want to cut, the best you can do, if you owe money, is cut down the penalties and the interest as much as you can. And obviously the IRS incentivizes you to do so by keeping in communication and good standing and setting up the agreements and, all that. All right, back to the text. Most taxpayers who cannot pay in full have the following payment options. Online payment agreement, there's a link to that here. These are available for individuals who owe $50,000 or less in combined income tax, penalties, and interest, and businesses that owe $25,000 or less in combined payroll tax, penalties, and interest, and have filed all the tax returns. So hopefully that covers, most people. There's a link to that process here. So that's going to be the online payment agreement. Back to the text. Most taxpayers qualify for this option, and an online payment agreement can usually be set up in a matter of minutes on irs.gov/OPA. There's a link to that here. Online payment agreements are available Monday through Friday, 6 a.m. to 12:30 a.m., Saturday, 6 a.m. to 10 p.m., Sunday, 6 a.m. to midnight. All times are Eastern time. Certain fees may apply. Installment agreements. And then we have the installment agreement. Taxpayers who do not qualify to use the online payment agreement option or choose not to use it can also apply for a payment plan by phone or by mail by submitting Form 9465 installment agreement request. There's a link to that here. Installment agreements paid by direct deposit from a bank account or payroll deduction will help taxpayers avoid default on their agreements. So once you set up a basically agreement, of course, then you want to make sure that you make the payments in accordance with the agreement, or you'll it'll default the agreement, and then you got to set up the agreement back up again. And again, the more you do that, the more difficult it can kind of get after a while, because the IRS starts to feel like it's they want you to keep the thing going. So it's going to feel like a not good faith thing, right? And then that'll be a little bit more difficult. So you want to set up the agreement, make sure you can set up the agreement to be able to clear the payments, which is something that there's a good deal of flexibility usually with the agreements to be set up. And then make sure that you pay them. And if you forget and whatnot, then you might just want to have some kind of electronic payment to automatically process it, just so that you don't accidentally forget. And then the payment plan goes down, because now that it gets canceled, and then you got to set the thing back up, and that's it kind of takes a lot of time. All right, back to the text. It also reduces the burden of mailing payments and save postage costs. Certain fees may apply. Temporary delay collection. You can contact the IRS to request a temporary delay of the collection process. If the IRS determines a taxpayer is unable to pay, it may delay collection until the taxpayer's financial condition improves. Penalties and interest continue to accrue until the full amount is paid. So you can actually compromise with the IRS. You can say, hey, look, I can't pay it. I'm going to have a temporary delayment possibly, or the next option is an offer in compromise. Just note that if you do the temporary delay, it looks like you're still going to be subject to interest and possibly some penalties related to the delayed payment. But if that's what you need to, so it may not be really a whole lot better option than the payment plan, unless the payment plan is you just can't make any payments, right? You can't make the minimum payments on the payment plan. Then you might just have the temporary delay, and that might be good. And then there's the offer and compromise, and you can look into the offer and compromise. Certain taxpayers qualify to settle their tax bill for less than the amount they owe by submitting an offer and compromise to help determine eligibility. Use the offer and compromise pre-qualifier tool. So if you owe a substantial amount of tax debt, and you just can't pay it, and normally the IRS is going to basically, you can look into the offer and compromise. It's all there. You can see, the process for it, but you're basically saying to the IRS, hey, look, there's no way that I'm going to pay the debt that's out there. It'd be best for both of us to settle for something less than that. And typically you would think, obviously from the IRS's standpoint, what are they going to ask for that? They're going to look at your ability to pay, typically, right? How much do you have on, what are your assets, liabilities? What are your revenue and expenses on a monthly basis or yearly basis? And then determine if, what's your eligibility to pay the outstanding debt? What are your circumstances? So, that is an option that could be available to some people. It's more likely that you'll get if they're actually going to lower the tax debt, the IRS is just going to lower it, even though you actually incurred the debt. You owe it. You're not trying to say it's not something I don't owe. You're basically saying, I know I incurred the debt, but we're going to negotiate it down. Then it's typically going to be a situation where you can't, you're not in a situation to pay the debt, and you're basically kind of convincing the IRS that that's going to be the case due to, current circumstances, whatever those may be, meaning that your revenue is probably not up to par to ever pay off the debt that's out there, and or you don't have sufficient assets over the liabilities to be able to pay the debt. So you can look into that. It can be a little bit complex on the offer and compromise, but there's a lot of information on it, and you can go through that process if it's something applicable to you. Back to the text. In addition, taxpayers can consider other options for payment, including getting a loan to pay the amount due. In many cases, loan costs may be lower than the combination of interest and penalties for the IRS must charge under the federal law. So it could be possible, and it's really a funny situation right now because the Fed, the government, is trying to lower interest rates, as to do whatever they're doing for the economy or whatever. And so the interest rates on a loan, could plausibly be low at this point in time if you were able to get a loan. The interest rates for the IRS are usually not fair. I think it was said like 3%, but if the interest rates get weirdly low due to the government intervention or whatever to stimulate the economy, then it might be possible that you can get a loan that's below the interest and penalties that you may be paying for the taxes, and then you can pay off the taxes with the loan, and then you'd have to be dealing with whoever you got the loan from, typically the bank, you would think, to pay off the loan, and that might be able to reduce some of the interest and penalties. In my experience, usually under normal conditions, the IRS interest rates are not, they're usually pretty good, and if you can avoid the penalties, you're pretty good. But again, you're in kind of weird circumstances with interest rates, and them might be artificially lowered by government intervention. So it might be possible to get an extremely low interest rate loan, possibly. And so you could think about that option as well.